I hope you all are doing great, right? So let's see here. I'm trying to connect on. Let's make sure Instagram is connecting. Let's see here. There you go. There you go. We are live. Right. Let me get my phone. Okay, that's awesome. That's awesome. So we are live now. So let's see who is joining. Let's see who is joining. Let's see who is joining. All right. All right. All right. All right. I hope you all are having a great day. Right. I hope you all are having a great day. So let's see. Today we're going to talk about go live. Awesome. Awesome. Right. Finally, we are live. Today we're going to talk about the profit and loss account. So let's see who is joining now. Let's see who is joining. Let's see who is joining now. Let's see who is joining now. Right. Welcome, 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 guys, everyone. Hi, hi. Right. So today is going to be exciting. So we're going to talk about the profit and loss account. Right. Angie, Aaron, welcome. Shandov, welcome. Right. All your it's be right. So awesome, awesome. So let's see. Today is going to be exciting. We're going to talk about the profit and loss account and why it is absolutely critical, right? Why the profit and loss account is absolutely critical for any business owner. As a matter of fact, if you are a serious business owner, you must have one, all right? If you don't have a profit and loss account as a business owner, then you're not doing yourself a favor, right? Mirel, welcome, right? So yes, so we're going to talk about the profit and loss account. It's going to be exciting, right? So let's give 2 more minutes for those who are joining, all the latecomers, right? So it's going to be exciting today. So let's see here. Let's see. It's going to be exciting today, right? It's going to be exciting today. Awesome, awesome. So let's see. Let's see who is there. Who is there, right? I can see one more person. So how was your Sunday? You tell me. You all tell me. Did you have a great day? How did you spend today? Have you been busy? So let me tell you how I spent today, right? So today has been absolutely busy. Oh, where's my water? Right? With tax season. Usually I don't work on Sundays, but you know, with the amount of volume, with the volume of work that I have, I had to do an exception and work today, right? To make sure that everybody's taxes is filed on time. So yes, so today we're going to talk about the profit and loss account, right? I'm going to try and make it as simple as possible for everybody to understand. Are you with me? Now, again, for those who are new here, my name is Jerry Pani. I am an accountant. I qualified 18 years ago, right? I love accounting. I love taxes, right? For me, I'm actually more interested and excited by taxes, right? Accountants, welcome. So yes, I love taxes. I qualified as an accountant 18 years ago. I've been in public practice. I've advised over 1,000 business owners and individuals, right? But the thing is that when you deal with clients, you always see new people with new behaviors and all this kind of stuff, right? But yes, so in the last 18 years, I've advised so many clients, and then also I love taxes. I'm a tax strategist. So again, I've expanded my business and services to include tax planning. I think last week I made a survey. I asked the question, who knows what tax planning is all about? 6 people answered, and all of them said they don't have an idea, right? They don't know what tax planning is all about. So let me kind of help you for those who are new here, right? Now, basically, tax planning is all about generating a tax plan for your client. So a tax plan is like a manual that your client can implement, and that would optimize the taxes or reduce the tax bracket, right? From maybe 30% to 3%, right? Now you have to understand that Some tax strategies are time sensitive. Are you with me? Yes. So it's going to be exciting. So let's go real quick here. So we're going to start real quick just because, again, today I'm going to try and talk just for about 20 minutes. And then I'm going to give the opportunity for those who have questions to ask your questions. And then we take it from there, right? So awesome. So today we're going to talk about the profit and loss account, right? I'll try to make it as simple as possible, not boring. Right? Yes. So for those who are new, you need to understand that the profit and loss account is also known as part of the financial statements. When you have a company or a business, you have the profit and loss account, and then you have the balance sheet. So the profit and loss account is also known as the P&L statement or profit and loss statement, and it's also known as the income statement, right? So now I was speaking to a client and they didn't know what a profit and loss account is. They had no clue. So it kind of, and then I spoke to another client and they didn't know what it was. So I said to myself, well, it's best I talk about these things today so that people don't have to be asking me the same questions over and over and over and over. I mean, I don't mind answering questions, right? And welcome, Godiva. Welcome, Alton's Properties. Yes. So for those who are just joining now, I'm going to go straight to the point. If you are a serious business owner, you need to have a profit and loss statement, which is also known as a profit and loss account or a P&L statement or an income statement, right? So I'll try not to make it to be boring, right? People say accounting is boring. Yes, I get it. I get it all the time, right? Now, so I'm going to try to make it exciting. So think about it. If you put money into an investment, right? If you put money into buying an investment property, for example, and then you get rent from that investment, right? You've incurred expenses in the process of generating that extra income, right? So you need to account for your income and expenses. So a profit and loss, let's just make it a simple. A P&L statement or an income statement is just a report that summarizes, the performance of your business, the revenue of your business, the cost of your business, and the expenses over a period of time, over a specific period of time. Cinnamon, welcome. So which means that what? You can have a profit and loss account for 2023. You can have a profit and loss account for 2022. You can have Flourish, welcome, right? You can have a profit and loss account for 2020, right? It is for a specific period. Now, for those who are just joining, like I said before, the profit and loss account, if you are a serious business owner, this is absolutely critical. You must have it. You must have it, right? Woodmana, welcome. You must have a profit and loss account for your business, right? So there are some key components of the profit and loss account. But before I talk about the components of the profit and loss account, you need to know that the primary purpose of the P&L statement is to show the profitability of the business over a given period of time, just like I mentioned before. Some companies do it quarterly, some companies do it monthly, some businesses do it yearly, right? It all depends on how how the frequency of the information that you want your tax strategist to get for you, to prepare for you, right? So it gives you an insight as a business owner. The P&L statement gives you an insight on how well your company is doing or your business is performing in terms of generating income and managing your expenses. So think about it. If you just keep making money and spending money, making money and spend money, how do you know if you are actually on the right track? How do you know if your business is profitable, right? That's why this document is absolutely important. It's a financial report, right? So we have the today we're going to also look at obviously the key components of it, how to generate one, and then we're going to look at the common mistakes that people make, right? Look, we have to stop all the confusion. We have to make sure that people do not make mistakes, the common mistakes. Now, so I want us to look at the different components of a profit and loss account, right? So I'm going to try and share my screen just to give you guys an idea, right? Let's see. Let me share my screen. I think it's best if I can share my screen. Let's have a look here. Let me share my screen here. So share screen. There you go. Share screen, right? So I need to make sure that you all can. Okay, there you go. I think it's live now. I love this. I get excited to talk about taxes and all this kind of stuff, right? I love accounting. I love taxes. I love taxes more than accounting, right? Awesome. So, can you all see my screen yet or not yet? I think those on Instagram, those on Facebook can see my screen, but those on, oh, there you go. We are live. That's awesome. So this is what a profit and loss P&L statement or profit and loss statement looks like, right? So there are different elements of a P&L statement, and I want us to have a look at it just real quick, right? Now, so you have revenue. So you have revenue is same as sales, right? So it contains that section that says income. So income is also known as sales revenue. Revenue, sales, income is all the same thing. It means the same thing. It means money that you have made from providing a service or selling a good, right? So if it depends what kind of business you are in. If you are into professional services like myself, then what I charge people will be, sales revenue is the same thing, right? So we have the income section, right? It lists all the income generated from selling goods or providing services, right? Or professional fees and all those kind of stuff. That's what we call income or revenue or sales revenue or sales is all the same thing. Now, the second component of a profit and loss account is what we call the cost of goods sold. The cost of goods sold. Now, most people say, but what are cost of goods sold, right? These things are confusing me. Now, let me make your life simple. The cost of goods sold are direct costs associated with you producing the goods or delivering the service, right? These are direct costs. So, which means that if you are, for example, in a manufacturing industry, any cost that is directly linked to associated with producing that good, for example, raw materials, direct labor, all the manufacturing expenses, these are all classed as cost of goods sold. So it really depends on the industry, right? Whether you are in construction industry, whether you are in like hotels, restaurants, and all those things, they're all the same. But the principle is that these are direct costs associated with producing the goods or delivering the services. I with me. So that's what cost of goods sold. They are just direct costs. So if I am providing a service, right? For example, okay, let me give you a good example. Let's say I have I use a contractor to do bookkeeping for one of my clients. That's is direct labor. It's a direct cost because that cost is directly linked to my sales. So it's a direct cost. So that's basically what cost of goods sold. But again, you have a slight breakdown. So in accounting, we have what we call opening inventory plus purchases minus the closing inventory gives you the cost of goods sold. But that's kind of, from an accounting perspective, right? Now, the other component of a profit and loss account, as you can see there, or the income statement or the P&L statement is the same thing. We have what we call the gross profit, right? So the gross profit is calculated by subtracting the cost of goods from the cost of goods from the income, right, from the sales revenue, right? And that gives you it really gives you the profit, the profit before considering operating expenses, right? So you have costs that are associated to the goods that you're selling, And then you have costs that are associated to the operation of the business. That's why they're called operating expenses. Are you with me? So that's kind of a nutshell. The income minus the cost of goods sold now give you the gross profit, right? Now the gross profit is before operating expenses. Operating expenses, as the word says, is just expenses that you require to operate the business. Are you with me? So this would include various costs in running the business, like wages and salaries, rent, utilities, marketing, other administrative expenses, insurance, and all those things. There are just too many of them, right? So that's another component of the income statement, right? I hope it's not too boring. I know it's too much information, right? We have Tip Baby Join, welcome. Miss Tate 803, welcome. Christian Register, welcome, right? So yeah, so that's kind of, these are the components of a profit and loss account, or the P&L statement, or the income statement. It's all the same thing, right? Now, the other component of the income statement is what we call, like I said, we have operating expenses. Now, we also have operating income or operating profit. So the operating income or operating profit is just obtained by subtracting all the operating expenses from the gross profit, right? So this figure reflects the profitability from your core operations. Are you with me? So these are all things that are so important in the profit and loss account. And then you have other income and expenses, which are really other income and expenses that are not generated from operating activities. So these are called non-operating items. For example, you have interest income, interest that is received from the bank account, and then you have interest that is paid out, interest expense, and other gains and losses from investment. So these are other income and expenses that are not directly related to, like, for example, the day-to-day core activities of the business, right? So those are the components of a profit of a profit and loss account, right? I like to say profit and loss account. Now, the next thing I want us to see is what is the importance, or what is the use of a profit and loss account. It's so important because think about it. You spend your money to start a business, right? You spend $10,000, $50,000, $100,000, $200,000 to start a business, but yet you don't even know whether the business is profitable or not. Now, it makes no sense, right? If you spend all that money to start a business, then you need to have an idea if the business is actually profitable, whether you're not wasting your time. Are you with me? That's why management would normally require, the income statement or the P&L statement to ensure that the business is profitable. Are you with me? So that's kind of the importance of the profit and loss account, right? I hope it's not too boring for you all, right? Now, so the thing is, how has anyone here? So let's see, among those who are connected, how many people have a business right here? If you have a business, can you please say yes, yes? If you have a business, who has a business here? Let's see, who has a business? If you have a business, just say yes, please. So let's see, how many people have businesses right here? Right? I know there's a lag between Instagram and those watching from other social media platforms, right? So I'm going to stop the screen share, right? So that we can, there you go. Awesome. So how many people here have a business? Let's see, those who have a business. If you have a business, say yes, yes, yes. Those who have a business, right? So we're going to continue. L MacG, welcome. Sugabuga, welcome. Right, so we've been talking about the profit and loss account, right? The goal is to stop all the confusion, avoid all the confusion, because so many people get confused. Now, the question is, how do you generate a P&L statement? You generate a P&L statement by, number one, ensuring that you have an effective bookkeeping system, right? Awesome, awesome. I can see people have businesses. Now, how many people have ever had a P&L statement, right? How many people have, or how many people have P&L statements for 2023 here? Let's have a look. How many people, right? So how many people have profit and loss statements or income statements for 2023? If you have it, say yes, or you can say me, right? Awesome. Now, so the question is, how do you generate one? To generate a profit and loss statement, you need to have an effective bookkeeping system, right? You need to have an effective bookkeeping system. So you either learn how to do bookkeeping or you pay a bookkeeper to do your books, right? Now, this is what I always tell people. If you want to do bookkeeping, whether you're using QuickBooks or whatever software you're using, make sure that you learn how to use it. Make sure that you become an expert, right? Why do I say that? Because many a times I've seen clients come to me, they've messed up so many things, and then it's just more expensive to fix the mess that people have caused. Are you understanding? So that's why I tell people, if you're not an expert, don't just waste your time doing it, right? Time is money. Time is of the essence. You have to consider, Reggie, okay, welcome. You have to ask yourself the question, am I willing to spend 30 hours to learn QuickBooks because I want to save $300 or $500? Ask yourself the question, is 30 hours worth my time? You have to be honest with yourself, right? I'm of the school of thought that pay the expert to do what they are good at, because at least you have that assurance that you're not going to make a mistake. Are you with me? So you just have to be careful. So to generate a profit and loss account or an income statement, you just need to have an effective bookkeeping system. Are you with me? Any decent bookkeeping software should be able to generate that. Now, the other thing that I want us to talk about is, what are the common mistakes? What are the common mistakes that people make when dealing with profit and loss accounts? This is crazy, right? Now, so here are some common mistakes that people make when dealing with profit and loss accounts. Number one, you have what we call misunderstanding of gross versus net profit, right? As we saw before, your gross profit is basically your sales revenue minus the cost of goods sold. That gives you your gross profit. And then the net profit is your gross profit minus operating expenses. Operating expenses are all the expenses that are required to run the business. You have payroll, you have travel, you have meals, you have all those kind of stuff, right? Marketing and so on. Now, so you should not confuse between the gross profit and the net profit. You understand? Now, the other thing the other mistake that most people make is that many people overlook non-operating items, right? They fail to account for non-operating expenses and income. For example, the interest and taxes. So these are all non-operating expenses and income, and these things can actually distort the true financial performance of a business. So you always have to be aware of non-operating income and expenses, right? Which I mentioned before. Now, another mistake that most people make, especially those who are not kind of, OEMG, welcome. So especially when you're dealing with people who are not really, experienced and qualified, they tend to ignore industry standards. Are you with me? So you have to make sure that whoever is doing your bookkeeping, that person is actually aware of industry specific accounting standards, because there are certain industries that may require some accounting standards compared to other ones, right? So you have to be very careful. Now, the most common issue I have seen is this. who is ready for the bombshell? The most common mistake that most people make is this: the incorrect categorization of expenses. The incorrect categorization of expenses. And I see this in most of the time, because at times some clients will send, summary of their bank statements. Some credit card companies have like summaries they'll show for traveling. Now, those things are never accurate, right? They're never accurate. If you want to have, an accurate financial statement, you just have to make sure that, number one, if you want to learn it by yourself, right, you become an expert. If you want to pay someone to do it, make sure that you hire somebody who has experience in this area. Are you understanding? So misclassification is absolutely very, very critical. Otherwise, if you just mess up, then it messes up the accuracy of the profit and loss statement, and then it's going to give you some flawed business decisions right there. You see, generally when you have a business, now I'm talking about people who have solid businesses, who really track their businesses, right? You always have to compare whether your actual expenses are too far off from your budget. Are you understanding? And we call that management accounts, looking at variances and all those things, right? So those are some of the common mistakes that people make. Now I'm going to the goal of today's session was to give a quick overview of what a profit and loss account is, and then common mistakes that people make, and then the components of a profit and loss account. This is absolutely important because, like I said earlier on, I told a client to give me some their P&L, right? And they didn't really understand what it's all about. But it's fine if you don't understand. It's fine. Life is a learning curve, right? So which is not an issue. So now is the moment for questions. Who has questions? Anybody has questions? Anybody has questions? Right? So anybody has questions concerning the profit and loss account? It's also called the profit and loss account, or the income statement, or the P&L statement. Anybody has any question regarding this? Now, if you've enjoyed today's session, just say yes, yes, yes. If you enjoyed today's session, say yes, yes, yes. Right? So the goal was to ensure that we stop all the confusion, so that people should become aware of these things, right? You see, in 2023, people should not be ignorant, right? Okay, somebody says, how much is a bookkeeper? L McG, I love your name. L McG. So to be honest, bookkeeping, it really depends. I'll be very honest with you, right? So some people can charge $100 a month. Some people charge $200 a month. Some people charge $300 a month. To be honest, it really depends on the volume of transactions, right? So think about it. If somebody has a small business and they have, let's say every month they have 10 transactions, that's different, right? I have one of my clients, they gave me their bank statements. Now, on each page of a statement is like 30 transactions. So imagine you multiply 30 transactions per statement times maybe 20 statements or 30 statements. That's a lot, right? So you have to understand that bookkeeping really depends on the volume of transactions. Most people would charge depending on your turnover, right? So if your turnover is less than, maybe let's say $200,000, they'll give you a flat rate, right? If your turnover is above $1 million, they'll give you a flat rate. If your turnover is maybe 2 million to 5 million, they give you a flat rate. If you're making over 10 million, they'll give you another rate. So it really depends on the volume of transactions and your turnover. Are you with me? So L McG, did I answer your question? Anybody has any other question? Right? The goal is to stop all the confusion. Everybody has to understand these basic things. I've tried to make it as simple as possible, right? See your profit and loss account as that document that shows whether your business is profitable. That shows whether your business is meeting its targets, its goals, its sales revenue goals, right? That's how you want to say it, right? Anybody has another question? Let's see who has a question, right? Who has a question? So yes, so the fees really depends. It depends on the volume of transactions and and the turnover of the business. Similar to accounting fees. So when people come to me and say, "Oh, Jerry, how much do you charge for taxes? How much do you charge for taxes?" It's hard to give a firm answer. Why? Because some people have one W-2s and one state return, and I've seen clients who have 10 W-2s and 7 state returns. So you can't charge people the same. I have some clients who have LLCs. I have some clients who have S corporations. I have some clients who have C corporations. I have some clients who have partnerships. So it's it really depends on what you have, right? What you have. And as a PJ Destiny, welcome. Jemima, welcome, right? So it really depends on the volume of transaction, on the complexity of the return that is being filed. So there's really is usually you speak to the expert. He's going to ask you a couple of questions, and then he's going to give you a quote. So that's how it works in the services industry. Any other question? Who has a question on the profit and loss account? Or if you have a general tax question, I can do it as a bonus. Just ask any question you have on taxes. It's tax season. Take advantage of it, because I'll be rounding up in 3 minutes, right? So we only have 3 minutes, just because I have much work to do, right? Unfortunately, I have to work today because of tax season, because of you, but it's a pleasure. It's always a pleasure to work. So let's see. Who else has a question on the profit and loss account, or maybe a general question on taxes? We have to stop all the confusion, right? Any question? Any question? We have 3 more minutes. Now, whilst people are thinking about the questions, right? If you've enjoyed today's session, just say thank you, Jerry. Thank you, Jerry. Right? If you enjoyed today's session, say thank you, thank you. Again, to make an appointment with me, it's tax season, right? So I want people to refrain from, my schedule is already kind of very, very booked. But again, if you want to make an appointment with me, just send me a text message, or you can send me a DM on Instagram, right? Send me a direct message on Instagram, or Facebook, right? Whatever platform you're using, send me a direct message, or you can just send me a text message, right? My number is 832-296-9110. Send me a DM or a text message, or you can go to my Instagram profile. There's a link in my bio there, right? I actually prefer if people just send me a DM or send me a text message, then I can, I'll call you to have a chat. We talk about what you want to achieve. And then if there's a need to schedule a meeting, then we're going to schedule a meeting, right? So does that kind of help? Right? Awesome, awesome. So we have 1 more minute for those who have any tax question, or any question on the profit and loss account, right? Has anyone got a topic that they want us to cover, right? This is tax season. If you have any burning question, any topic that you want me to cover, just let me know. I'll gladly do that for you, right? So let's see who else is, any other question, any question. So it's my pleasure, guys. If you have any question, just let me know. We're going to talk about different things as time goes by, right? But just bear with me, it's tax season, so you can imagine how busy I am with taxes. But I love taxes. We'll have sessions where we talk about simple tax strategies that people can use to reduce their taxes. Now, this is what I'm going to say. This is a bonus right here. For those who are, this is a bonus. Now, if you want to reduce your taxes for 2024, if you are a W-2 income earner, you have to make sure that you don't claim any deductions or exemptions on your W-4. That would increase your chances or your likelihood of getting a refund, right? Because you see, at times people come to me and they say, oh, they go exempt and they are surprised that they are owing, right? Now, so you have to make sure that you do not claim any deductions or exemptions on your W-4. Now, the second thing is that if you are just a W-2 income earner, you must have a business. Make sure you have a business in 2024, no matter what business it is. Just do something. Look, let me show you guys a simple trick right here. This is what you can do. So this is kind of bonus for those who say, oh, Jerry, I don't know what business to do. You can register an LLC, get your business cards, right? Fly to different states and promote your business. And just that flight ticket and all the traveling is a tax write-off for you. Right? Register LLC, print out business cards, fly to different states, promote your business, and claim all those trips as business trips. What else do you want? Right? When you go to restaurants, talk to your friends, talk to them about your business, give them your business cards, claim the meal as a tax write-off. Right? So these things are so easy. Don't make it complicated, right? Don't make it complicated. It's so easy. If you are flying to different states, different cities, convert it to business trips. Talk to people about your business. Print business cards. Vista print is cheap, right? Print all your business cards, give it to all these friends, and claim the thing as tax write-offs, right? So awesome. So that was kind of a gem, a bonus, right? And then you can also claim things like your cell phone. Obviously, if the cell phone is not 100% for business, you can claim a portion of it as for your business. 1,000 good intentions. Oh, awesome! Welcome. Unfortunately, you're joining at the end, right? So I just gave like simple tips that you can use to claim all the tax write-offs. So I've got to stop here, guys. Thank you for joining. I'll try and talk about another topic next weekend. Invite your friends. Please share with your friends. We are in a day and age where nobody should be ignorant. Are you guys with me? So you guys have a blessed week and a blessed day. I will meet up next week by the grace of God. You guys take care. Bye-bye.